Good afternoon, ladies and gentlemen. You are welcome to Speedy Success Professional. Our lectures today, we will be looking at standard costing and variance analysis. This lecture is going to take us three parts. This is part one. You are welcome to the class. If you have never subscribed to our channel before now, or you are just watching our lectures for the first time, this is Speedy Success Professional. I am Femi Richworld Aiyeolowo. My name is Femi Richworld Aiyeolowo. Please subscribe to see more of our lectures. Are we together? All right, today we'll look at the targets. One, we'll look at definition of terms. We'll look at the objective of standard costing. We're also going to look at types of standard and capacity, variance analysis. We briefly look at the cost book. How do we keep the book? And then we take ourselves to the advanced variance analysis, control ratios, planning, operating variances, advantages and disadvantages of involving traditional variance analysis with planning and operating categories. And we'll do our practice questions. Ladies and gentlemen, please subscribe. My name is Femi Richworld. This is Speedy Success Professional. Speedy Success Professional Performance Management, cost account, standard costing, and variance analysis. You are welcome. Let's go to definition of terms. We will quickly look at what is standard cost. Standard cost simply means the planned unit cost of a product, component, or services in a particular period. I call it predetermined cost of items. Now, what is standard costing? Standard costing is a costing technique, very useful costing techniques, which is based on feedback control concepts, which measure the determination of standard costs of products and services, also comparing them with the actual results and costs, with the differences being named or referred to as well variance. What we're trying to say here is that standard costing is a principle of costing that compare budgeted amount or standards against the actual results. And this can only be done when feedbacks from the past period is being brought to the fore for us to project the future. The last definition is variance analysis, and we say it is a simple process of breaking down the various variance into different units or components during a particular period. One more time, my name is Femi Richworld. You have not subscribed to our videos, please subscribe and get more. Let's look at reasons or objective of standard costing. All right, we're looking at objectives or reasons of standard costing. Why do we do standard costing in various companies or in businesses? One, it serves as a basis for fixing prices and quoting for jobs. You are into manufacturing or of products. When you apply standard costing or standard cost into your pricing model, it allows for easy quoting of job or fixing of your prices. Number two, Standard costing model ensure that inventories and work in progress are properly valued. There is no overvaluation. Why? There is a cost that is very consistent with the business, and that cost is used in determining the current value of the product. In normal international accounting standard, we say that the IS2 required that a company can apply standard costing alongside with first in, first out model or weighted average model. So standard costing is acceptable globally. Number 4, the standard costing model ensure that performance improvement measures are adequately guided. If you do not apply standard costing, it may be very difficult for you to consistently perform during rapid changes in the economy or in the currency of your jurisdiction. So standard costing empowers companies to stay well guided in their performance measurements. Number 5, it ensures that standards are put in place and variance properly analyzed in order to control costs. The major reason for variance analysis is cost control and monitoring. Number 6, it serves as a basis for determining unprofitable ventures, and when that is done, we can shut them down or see a way to improve on such venture. The last one there, standard costing encourage management and employees to perform because it allows them to prepare their budget ahead of time. All right, ladies and gentlemen, one more time, this is Speedy Success Professional. You have not subscribed to our videos, please. My name is Femi Richworld. Subscribe. You have problem with putting in standard costing in your business, call us 08148421111. You are in Nigeria, you're outside Nigeria, 0+234 818 +234 8148 42 111 and 1. Let's quickly look at some challenges of standard costing before we go ahead and look at the standards and capacity. Then we'll close for the class. Already? Let's look at it. Challenges of standard costing. Number 1, employees could resist the implementation of standard costing in their organization if they do not understand the application. Very, very key. A number of companies are not applying standard costing because the employees are not ready to implement because of the complexity of it. They may not understand, probably the consultant or the manager in charge also could not impart correctly the simplicity of it. Number 2, confidence of users may be eroded if they become outdated, especially where you have a situation where we have hyperinflation or cost is just changing, it's changing every day, prices changes every day, there's no consistency, standard costing may be very difficult to apply. Are we together? All right. The last line, it may be very expensive to operate because it required expert involvement. Please subscribe to our videos, and when we meet in the next class, we'll look at formulas and standards. Let's see you in the next class.